Welcome everybody to our Twitch TV live stream. My name is Glenn Tompkins, Senior Instructor here at VectorVest. My pleasure to be here on this Twitch live stream. Kirby is here. I'm just eating popcorn today, watching all the VectorVest indicators go down. Thanks to VectorVest helping us make money in any market. I'm up 7% just today. Way to go, Kirby. Way to go, my friend. Asif, good afternoon. I know we only have now 2 Twitch sessions for the next couple of weeks, and then we're going to go down to 1 Twitch session. We're going to keep the Thursday, trending Thursday. So it is what it is. Good afternoon, Terry. Glad that you're here. So the whole idea, even though we're having a lot of fun here, we weren't getting a ton of people here. That is what it really comes down to. So the powers that be made the executive decision to kick back, knock down how many Twitch sessions we're going to do on a weekly basis. But I think that the Twitch panel that we did was a huge success, and that may be something that we're looking at to do a little bit more often, so we'll see how that works out. But right now, we're doing Twitch 2 days a week, and that's on Wednesday and Thursday until this mini-series that we're doing is done. And then we're going to be down to Thursday. So there we go, just to keep you in the loop as to what's going on. Next thing I want to do, I want to talk about the software that we're going to be using here in case you are new. The name of the software is called VectorVest. It's been around for 30 years. I have been an employee here at VectorVest here for 15 years. So I've been here for just as half the time that VectorVest has been around. So VectorVest, by way of being here for 30 years, is not a company that's a fly-by-night company. It is a stock analysis and portfolio management system. We analyze over 8,300 stocks, better than anyone out there in this industry. Portfolio management, I can show you ways to grow a portfolio, and that's what this mini-series is all about. This is part 3 of the mini-series, which is entitled Portfolio Growth Made Easy. So this is part 3 of that mini-series, Portfolio Growth Made Easy. And in the first week, we talked about a lot of the different portfolios that the VectorVest software has to offer you right off the bat. So if you want to be guided, handheld all the way through a portfolio that's a really good portfolio, look at any one of our model portfolios. It will tell you 1, 2, 3, when to buy, what to buy, when to sell. All right. Last week we got into market timing. How important is market timing? Talked about the different market timing signals to accommodate any type of investor in the market, whether you're aggressive, prudent, conservative, or even if you are a speculative trader, we can help you with any kind of market timing that's necessary. Now, when I say market timing, we don't predict which way the market is going to go, but we follow the trend of the market to keep you on the right side of the trend. With the market's conditions the way they are right now, and with a big down day like it is right now, the VectorVest software in and of itself has already had our customers playing the market to the downside, at least hedging positions or shorting positions, or if you don't want to do either one of those, sitting on the sideline. So the VectorVest software makes it so that when these days come that you are not blindsided, and I'm going to talk about that in a second. All right, so today we're going to take it a step further, and we're going to talk about the 30,000-foot view of Unisearch and how you can utilize Unisearch to accommodate the type of investor you are. So we're going to do that, and then next week we're going to fine-tune the Unisearches so that you can hone in on the types of stocks that you want. The flexibility of this software is unsurpassed. There's nothing pretty much that you can't do with the VectorVest software, especially from a searching or scanning type of a scenario. If you're looking for stocks with the price of this and a volume of this and dividends of this, dividend yield, earnings per share, PEG ratios, growth to earn, man, anything that you want, you can put together as a search to segue through all of the over 8,300 stocks that we have. So you can put yourself in the best possible position to have the software work for you. And as you look at the people in the room, Brian, go Patriots, whatever, Brian, as you look in the room and see the people who are chatting, everybody in this room trades a little differently. VectorVest is not a one-size-fits-all. That's not how we work. And we can be tailor-made to how you work. Before we get started, so this is all about portfolio growth made easy. All right, I don't know why Daniel made that such a long name. But anyway, portfolio growth made easy. And today, we're going to talk about utilizing the Unisearch tool. That tool will help you to find strategies that fit the way that you invest in the market. First thing I want to start off with, no matter what you're trying to do to grow your portfolio, market timing is key. What's going on in the market right now? Well, is right. What's the market doing? All of the major indices are down. What did this look like yesterday? All of the major indices were up nicely yesterday, up in excess of 1%. But today we've erased that 1% gain and doubled down on that. All of the major indices, to include the VectorVest composite, are down 2% today. This is what you call fear in the market. This is what you call a news-driven market. This is what you call tariffs. And yesterday, we had a rebound because some of the tariffs were going to be delayed. That was looked at as good news. The market turned around and went up. Now, we're just talking about, well, we're getting close to a possible recession, and Trump is going after the Fed for not dropping the rates a little more than just a quarter basis points, and now it's his fault that the market is going down. So back and forth, back and forth. And I saw that, Kirby. It was delayed until December 15th, which is still before Christmas, which still would have affected the companies like Apple and a lot of other manufacturers. I just saw that. It says delayed until December 15th, but still prior to Christmas. And he said and made a statement that, I was trying to help people out, so I delayed it for the Christmas holiday. But wait a minute. This tariff would have still hit in 10 days prior to Christmas. So I saw that. But after the Xmas products have been imported. All right, I got you, Steve. Kelly says, Trump says he delayed China tariffs as a Christmas gift to the U.S. shoppers. I saw that. How should we investors understand that? Well, Steve is right that as of the 15th, or prior to that time, all of the Christmas products would have already been imported. So they would not have been put with the extra tariffs. So that does make sense from that perspective. All right, that does make sense from that perspective. And the inverse yield curve preceded 49 of the last 50 recessions, high probability. So something else, in regards to a recession, when the recession lights go off, when does the recession happen? I just want to get a feel of what you know about these alerts. When the recession flags go up, when does the recession hit? Does anybody want to point out or give a guess to that? All right, so we're hearing more about the flags going up. If that is the case, yield inverted in 2005, recession in 2008. And that's exactly where I was going, Steve. When you get the flags for the recession, it doesn't happen until a year or two down the line. It doesn't happen until a year or two down the line. Kirby says, when VectorVest tells us in the Friday end of week report. King Lucci says, do you think tomorrow will still go down or will it be choppy? I am going to put out there that based upon what I see in the market today, big down day, yesterday was a big up day. Who's to say that we won't have a big rebound day tomorrow, King Lucci? All right, as I'm showing you what's going on in the market, I'm going to take you to another screen. And is that the right one I want, Joey, or is it this one? I want this one. All right, this is the market timing graph. All right, I'm going to add a new graph. All right, I want you to look at something. The VIX is the volatility on the S&P 500. Maximize that. All right, is the volatility on the S&P 500. And what I'm going to do is I am going to take off support and resistance for a second. I'm going to take off the last close, and I want you to hone in on a value of about 15. All right, let me find you 15. 1486, 1492. That's 1509. That's close enough. All right? I'm going to make that a little darker. When I'm tracking the volatility, remember back in October to December? All right, remember in October back to December? Here's October. And here's December. Remember how icky the market was? Look at where the volatility was. Above that value, the market was going up and down, up and down, up and down. Look at where we are right now. Back in May to June, volatility got above the value of that 15 value as well. The market was a little volatile. And right now, look at where we are now compared to back in May, a little bit more volatile than we were back in May. So keeping that all in, well, Abraham is here. Hey, sweet baby Vec. Wow. Well, good to see you, Abraham. As a matter of fact, I know that I'm wondering if, it says VV in front of it. Are you our VectorVest, Abraham?
Yes.
It is? Yeah. All right. Hey, have you liked have you followed us yet? If you haven't, follow us, Abraham. You need to do that. Trade war is big win for me. Every time bad news, I bought there you go. Thank you, Abraham. That was Abraham, yeah? Thank you very much, my friend. Solid stocks, and the next day it goes up crazy like 4%. Free money. Not always free money, because King Lucci brings up a good point. What are the chances that the market continues going up tomorrow? Well, from a volatility standpoint, and this is why Providence or Rhode Island is in here saying, you know, look at that. The 3 and the 8, we use moving averages. The 3 and 8 exponential moving averages. As the 3 and the 8 hit, that was a good time. Even when volatility pulled back, about the 3 and the 8 keeping pace. So people who are trading the VIX or the TVIX are definitely making money. Since 8-1 extreme volatility, I don't disagree with you, King Lucci, and that's why we have up days, big down days. So go back and answer your question. I'm going to go back to the market timing graph. Let me zoom in. To answer your question, will we have a continued down day? I want you to look at something else. Where is the price of the composite at right now? Right at a level of support. Let me make that a little darker. So with that information, King Lucci, I think that we're going to have an opportunity to come down to this level on the VectorVest composite of 45.85. From that point, we should bounce and rebound and come back up. How many times have we hit that floor? 1, 2, 3. It actually fell through that 4 back in May and then served as a level of resistance and broke back above it, and we've been still above it all of that time. So let me answer your question this way. I'm thinking that the price of the composite still has some downside to the value of about 45.85, and from that point, we should rebound again or challenge this next level of a low that happened back in late May, early June. Let me make that a little darker. So that's to answer your question. If we break down, then we have another level. Let's put this on the 6-month graph. That's a good 6-month level. This is a good 6-month level too. Look at that. That's a solid line that we can look at from a level of if the market's got more downside. This is a 1-year graph. And then after that, we do have back into December, January, where we had the low in the market as well. So using support and resistance where the market has stopped, whether going up or going down, is a good sense to understanding if we have an opportunity of the market to keep coming down. King Lucci, does that make sense? Kelly says on the 1-year chart, you could easily see the resistance line. And you notice I have levels of resistance, and I also have current levels of support where we are sitting in a channel right now. Look at that. We're sitting, and we were in this channel for a minute. We're back in this channel at the lower end of this channel right now. So let's take all of this information that you see right now, and if you're looking for an opportunity to start searching for stuff to get into, think about it. Which direction would you be pulling the trigger right now? Would you be bullish? Would you be bearish? Or would you be sitting on your hands? Type it in the room what you would do. Based upon what you see right here on this market timing graph, would you be bullish? Would you be bearish? Would you be sitting on your hands and waiting? All right, so type it in the room. I want to know. Typing in the room. Now, also, King Lucci says, when there was a good traction on the war and the market was moving predictably. That's also correct. Let's go see. I see bull, I see sitting. I believe it's panic selling. And one thing I always want to teach you guys never to do, never panic sell. Never panic sell. Let your plan come to you. Plan your trades, trade your plan. That's another mini series that we did. Plan your trades, trade your plan. And that's the hard part, trading your plan. But once you've developed the discipline to trade your plan, you keep yourself out of hot water. People sold off because of the riot in China. There's a lot of outside factors wrapping up into what's going on in the market. This is something else I want to tell you. There's three things that move markets globally. News is one of it on the short term. But globally, to the what drives markets, whether bullish or bearish, what drives markets, earnings, interest, and inflation. Those are the three things. Those are the three things that move markets globally. Tariffs, news-driven. Riots in China, news-driven. We had some kind of nuclear thing happen in Russia on a something, news stuff. There are things that will move the market short term. But what drives the markets are earnings. If earnings are rising, markets rise. The other two things, interest and inflation, are the bad guys. But if they stay low, that drives the market higher, which is why you wanted, the Fed lowered the interest rates, all right, which helped the market, but the interest rates was more so for the economy. The economy and the markets are two different things, but lowering the interest rates drove the markets higher as well. And lower inflation drives the market higher as well. So those are the three things that move markets globally. The other things that are in play by way of news are just that. They are news features, but they don't drive the market. They will affect the market because it becomes more of an emotional thing. And then when the market settles in, the market pops back up to where it was supposed to go. All right, so news could be a way of sidetracking the market, but the market's going to do what it's going to do, and you can't outguess the market. All right, so I just wanted to know, some people said wait, and King Lucci said, but I'm aggressive. Dave said bearish. Kelly said, I'm bullish for the end of the week. Mal says bearish. And King Lucci said facts. There you go. Rhode Island says things that make you go, Well, it's not things that make you go, These are the things that most people need to understand. And the reason why you come to a session like this is to, one, learn more about the market, but number two, learn how a tool like VectorVest can help you make heads or tails of what's going on in the market. You can get caught up in the quagmire of what this talking head is saying and what this talking head is saying and try to put it all together. VectorVest takes all of that stuff out of the equation and helps to solidify a bona fide decision that you can make. So for all of you who said right now is a good time to sit on your hands, I'm okay with that. For all of you who said bullish, I'm not sure I'm really okay with that yet, based upon I want to see the market give me more of a bullish signal. What's a good bullish signal? Looking at this, how about the stock, the 3 and the 8 on the market move back up? How about the 3 exponential moving average goes above the 8? How about the stock market or the VectorVest composite bounces off of a level of support, gives me a bullish candlestick pattern with follow through? So for all of you who said that you were bullish right now, listen, I can say that from the December time frame period back in December 24th, when we got this nice up market, look at that. We did hit a higher high here, but where are we now? We are moving sideways. So for anybody who's saying bullish right now, maybe if you're trying to be bullish on individual trades or trying to hedge using a contra or something like that, those are shorter term trades. If I'm moving and I'm investing in the market here, that's a solid trend. That's where I'm more comfortable saying I'm bullish and I'm going to be longer term bullish. Even here, when I'm bullish, knowing when I got to a level of resistance and it pulled back around, that was a good opportunity to take your profits off the table. Not nearly as long a run as from this December time period, right? So if we put all of that into perspective, looking at where we are right now, I am going to move us over to the Unisearch tool. I'm probably going to have to go this way. I'm going to move us into the Unisearch tool. It's a tab found at the top of the software, and it's called Unisearch. Now, the Unisearch tool will offer you every aspect of trying to find stocks based upon how you invest in the market. How many people in here consider themselves to be more aggressive? Number one. All right, type a me in the room. How many people consider themselves to be more aggressive? All right, type a me in the room. While you're doing that, Terry said, trade some stocks that I can see me move the stocks with just my trade. Be careful with those. Be careful with those lower dollar stocks where you might just move the stock. All right, Kirby is like prudent aggressive. I call you progressive. Dave says, and be careful, Dave, when you say that you're aggressive, I am, based upon just you being along with the Jockey Club or even in here, I am going to put you more in the category of being more prudent. That is just my opinion, especially if you ever say that you're not making money with the market in the market using the software. I'm going to put you more in the prudent category because I think that the fastness of the market may or may not work out best for you. That's just my opinion, just based upon some of the statements back and forth between you and myself. Again, that is strictly an opinion. That is not fact etched in stone. All right, so the people who said that you're aggressive, if the market's conditions were right for you to buy stocks, or if you were looking for stocks to get into right now, where could you go? We have a group here in the Unisearch tool called Search is Aggressive, ideally suited for the more aggressive trader. All right, so how about, let's do this. Let's go back to the graphs for a second. I'm going to show you how you start to put into play some semblance of a strategy to use. And gosh darn it. I don't have a real upward situation to jump you into, so we're going to do this. I'm going to do this. I'm going to give you a time, primary wave, coming off the bottom. I'm going to give you a time period to look at a strategy to test it. All right? And you'll see what I mean in a second. Let's go put this back. I want Popeye's chicken. I don't know why. 12.8 to 128. Does everybody understand where I just got that date from? So I'm going to use a primary wave, which is an aggressive signal. All right, and I'm going to use a time coming off of the market bottom, which we got you in pretty close off the market bottom. And yeah, I want some dirty rice. Dirty rice at Popeyes. I like the dirty rice at Bojangles too, as a matter of fact. Dave says, you are right, as my trading account can't support my aggressiveness. And again, listen, I ain't putting you down or none of that stuff. I am trying to be a steward or a good steward to help you, my friend. Because what was my promise to you at the beginning of the year from the Jockey Club? To help all of you guys make money? I'm trying to put you in that. I'm trying to put you in the winner's seat, man. Let's go use that date, coming off the a bottom back in December to a primary wave down. I'm going to show you the power of looking for, trying to find a strategy. All right, let's go to aggressive rebounders, and I'm going to go through each one of these. This is a way, if the market's conditions are right, that you're going to try to find a strategy to hone in on. All right, the first search is aggressive rebounders. Everything that makes the search is found in the parameters. We're looking at our indicators, relative safety, less than 1. I'm looking to take on a little bit more risk as an aggressive trader, right? But my upside potential, RV, has got to be greater than 1. I want volume shares traded to be greater than the average volume. That helps to make sure that I ensure liquidity when looking for my stocks. My PE ratio less than 10. Most people, without understanding that we assign a value on a stock, most people use PE to give you undervalued or overvalued stocks. A PE, for the most part, less than 10 will give you primarily undervalued stocks. Earnings per share greater than 0. I want to make sure that the company is making money. The price of the stock has got to be greater than or equal to $1. Average volume greater than 100,000 shares, which takes me back to that's good average volume to ensure liquidity. But from an aggressive standpoint, I want the shares traded today to be greater than the average volume no matter what it is. All right? Kirby says, your promise was that you were going to pay for all the VectorVest subscriptions if we didn't make money, wasn't it? H.E. No. Before I went any, no, I didn't say that. Mal says, to the community, I'm getting a lot of buffering. Does throughout improve the Amazon Prime link to Twitch? I don't know. And that could be a Daniel question. Daniel, can you look at Mal CLT to answer his question? All right. Cub, what's up, man? I haven't seen you for a minute. Oh, Steve has already answered it. I'm getting a lot of buffering on Twitch today. So is it us or is it them? It's not us? All right. I don't know. Terry says it's your computer. I don't know. There are trolls. No, they're not. Daniel catches all my trolls. If there's any trolls, Daniel catches them. All right. Kirby, you're crazy. I want a puppy. You want a, well, I'm going to let you all keep on going. It's a Twitch issue, Daniel says. Daniel, change the color of your name of the VectorVest. I can barely see it. Dow is down 735. All right. Before we get to what's going on in the market right now, from the standpoint of trying to use the Unisearch tool to hone in on a way to grow your portfolio, let's look at that time period that I talked about, 12/8 of 2018. Let's go back in time. 12/8. Oops, dang it. How did I mess that up? Joey. It's all Joey's fault. He's got my fat fingers. What was the date? Oh, it was 12/28. I knew that. 12/28. Let's go back. 12/28. I knew that, Joey. 12/28. I'm going to run that search as of the primary wave up. Aggressive rebounders. I want to look at the top 10 stocks. Okay? Run the search. So out of the over 8,300 stocks that we track, here's the top 10 stocks that fit the criteria of everything that we're looking at, along with sorted by our master indicator, VST. Kirby says 2018, not 2017. No, I'm gonna show you something first. All right, I'm going to do some quick testing of all of these stocks. It's going to quick test it from 12/28. Oh, Kirby's right. It should have been 18. That was my fault. Thank you, Kirby. Oops. Uh-oh. Did I break it? No. How did it get to 2017? That was my fault.
Are you new here?
I might be new.
This your first day?
It might be my first day. 12/28 of 2000. Thank you, Kirby. Click on OK. Now run the search. There we go. Thank you, Kirby. All right, here's the 10 stocks that were found on 12/28 of 2018. If I did a quick test of the top 10 until right now, how about even with the market's conditions? How about you aggressive traders? How about even with the market's conditions? If I bought all of those stocks and held them until right now, I'm still up 5%. How about because I found PVG up 56%, CZZ up 48%, MDC. Yeah, I got some stocks that I took big hits in. But even if I were to hold them, put them into a shoebox and hold them, I'm still up almost 5.5%. There is blood in the streets today. Unfortunately, most of it is mine. Then you know something, Dave? Don't put your blood in the streets. Always, always, always limit how much you're going to lose and stop the bleeding. Always, no matter what. All right? So that was just interesting in and of. Why did you take that away?
Because I have to reset it.
All right. That was interesting in and of itself, that even as a trader, that those top 10 stocks, were still automatically making money. All right, so I'm going to show you something. If I use market timing to get in, that was the primary wave up. I have to use market timing to get out, which would be the date of January 8th. All right, let's go back to January 8th. That's when the primary wave went down. Let's run the test again. There we go. So from a primary wave up coming off of the bottom to a primary wave down 7.98%, blew the market, almost double what the market did. Almost double. Whoa, it changed the whole color and everything. All right, almost doubled what the market did. All right.
See it now, right?
Say, I could see it before. All right, let's go.
Couldn't see Daniel's name.
Oh, I couldn't see Daniel's name. That was it. All right.
Couldn't see everything.
Aggressive small fry. Let's go see if it did better. 7.88%. All 10 stocks made money. Man, now you see why being an aggressive trader can work. But what I'm not showing, this one didn't make money. What I'm not showing is any of the drawdowns that come along with trying to trade all of these. 5.42%, 9 winners, 1 loser. Best stocks under 15. 9 winners, 1 loser. Bottle rockets. Didn't even get me 10 stocks. 5.81%. All 5 made money. High flyers. Notice that I'm still sticking with the same 2 dates. 12/28 to 1/8. 3.95%. Ka-ching, ka-ching. Chinese stocks. Quick test. Only 2%. 6 winners, 4 losers. You know what this is doing for me right now? If I'm trying to find something that I want to get into, I am now putting myself in a good position to try to find a strategy. 6.94%. It would be the last one that I put myself into, did the best. I think 6.94%, or was it aggressive rebounders? Aggressive rebounders, 7.98. So now, from an aggressive standpoint, I am looking at a possibility of a strategy that I'm comfortable with. Now, what do I do from this point? Now I go through the process of back testing it. I back test it over more than one time period, still using the same market timing call, but I back test it over multiple time periods, number one. And number two, I start initiating some stop criteria to help maximize my gains and minimize my losses. So this is the beginning point of knowing where you are as an investor, knowing what type of market timing signal you're going to use as an investor, and then honing in on the type of stocks that fit what you're looking for. Question comes up is, quick test one stock, TQQQ, from 1 July of 2010. Why am I doing that? But I can do that. 2010, July 1. All right. Quick test it. What is it up? 2,566%. All right. So what does that tell me? I'm just curious to know. What does that tell me? It's a 2-time leverage on what? The Qs. So you're saying that the Qs, by way of this ETF, look at the price of it, starting at $1.52, that the Qs over that time period, 9 years, is up that much. Anybody gonna hold that stock all the way through that time period? Yes or no? Oh, it's a 3-time. Is it a 3-time leverage? I thought it was a 2 when I saw Ultra. I thought it was a 2, but it's a 3-time leverage. So what you're telling me, Cub, though, is as well as it's gone up, I have no idea of any of the drawdown on it, right? So it's good to know that it's up that much. Is anybody going to, now, what was the drawdown on it? What was the drawdown on it? All right, and I could probably do a test, but I can't do it now, and probably don't have enough time to do it. I would be very interested to know, yes, it went up that much in 9 years, almost 9 years. What I really want to know, oh, that's from 1/8. Actually, let's stream it until now, run the test. It's even 3,600. What I want to know is and look at the VectorVest composite is up 100 points, 100%. So we've doubled what the VectorVest composite has done in the 9 years. But I'm curious to know what the drawdown is on it. All right, and Dave says TQQ is the best trade period. So you know something? Why not trade it? I'm not going to tell you not to. Why not trade it? Let's do this. And remember, we're trying to grow our portfolio easily. This is a 1-year graph. As much as it went up, look at that. Is anybody in here willing to sit through that? Dave, including you. Anybody willing to sit through that where the price of the TQQQ went from $71 down to $30. Anybody willing to do that? No, I already did. I'm not going to run it again, Cub. I just did it. I just ran it from 1 July 2010. That's the only stock you trade. I hear that. I hear you, Dave. But that's a tough trade when it don't work. And if you're going to do that, Dave, then, at least use something like trend lines. Use the 3 and the 8 to get in and out at the right times. If you're going to do that, if anything, we've at least hopefully done that. If you're going to short, I wouldn't short. I would just buy the inverse of it. Kirby, what's the inverse of this? Mal says the chat is streaming, but the video is frozen. Refresh your screen, Mal. I forgot what I was getting ready to say. Oh, use the 3 and the 8 to get in and out at the right times. Oh, SQQQ. So when this is going down, Dave, I would suggest buying the SQQQ long. That way you never have to short. Are you saying the SQQ doesn't work as well, so you just short the TQQQ? Whatever works for you. If that's what works for you, then so be it. But the main crux, let me close that. The main crux is being able to use the Unisearch and hone in on a strategy that fits you at least over one time period, from an up to a down call, and then from the next part to go into and test it over the last year or 1 to 3 years, to see how well it works over multiple time periods and start incorporating some semblance of a stop criteria. How many people in the room consider themselves to be prudent? And Kirby brought up a good point for you right there, Dave. The SQQQ is up almost 9% today. If I'm going to play the ETF, I'm going to play both sides of it. If that's what you're comfortable with, Dave, then I would go with the TQQQ to the upside, but the SQQQ to the downside. Again, just an opinion on my part. Not quite. They are an estimated 26,000 crashes involving deer every year in New Jersey, and the hazard is great. What are you talking about? And peak mating season late October. Joff, where did that just come from? Cub says the point is that it is time in the market versus timing the market. A lot of gain comes on reversals and short bursts. So would you rather just be in the market with an indicator, or would you rather time the market to get in and out to maximize your appreciation, to maximize your opportunity to make money to the upside or to the downside? I'd rather have you in and out of a stock at the right times than for you just to hold the stock long term. And Terry says, oh dear. I'm not sure where Joff came up with that. I don't know where that came from.
Doing some work somewhere else.
Is that what it is?
Typed in the wrong box.
He might have typed in the wrong box. Dave says, I often hedge overnight holding both TQQ and SQQ if I'm not sure of direction. All right. Again, what I'm trying to do for you now, Dave, is at least point you in the direction of, based upon how you invest in the market, trying to find a strategy to get into. Now, are there other ways to find some aggressive? Sure. How about looking at ProTrader? How about looking at moving average crossovers? How about looking at technical indicators? In order to have the ProTrader folder in your Unisearch, you need to have ProTrader. If you have real time, it's part of your real time subscription. If you have end of day or intraday, it is an additional cost to have the ProTrader tool. But the ProTrader tool is great for you guys that are aggressive to help you to find some strategies as well. How many of you consider yourselves prudent? How many of you consider yourselves prudent? Isn't holding SQQQ and TQQQ like putting equal money in black and red on the roulette table, then green hits? I don't know. You would think that they would offset each other. That's what you would think. But the hedge helps you to not lose money. It may not help you make money, but it will help you to lock in profits. It may help you to not lose money. All right? So how many of you, Terry says prudent. Anybody else? I know Kirby is prudent too. So if I'm going to be looking at prudent searches, what timing signal could I look at for a prudent investor? What timing signal could I be looked at? Steve says, I try to be prudent, but am tempted to take risks. So maybe you're progressive like me and Kirby, Steve. Dave says prudent now. You know something? You can still trade the TQQQ and SQQQ from a prudent basis if you look at either moving averages like the 3 and the 8 exponential or the 20 exponential EMA. You can still trade those two prudently. The DEW is it. So let's go back to that graph. Let's go back to that market timing graph. And let's go put on the DEW, which is our good signal. Coming off the bottom, when was this call? From 111 of 2019, 111 to 322, 322. So I'm going to do the same process. Remember, from the standpoint of trying to create a profitable or grow a portfolio, I'm now going to utilize the Unisearch tool in the prudent folder. Let's change the time period now. So the time period that we saw was from 111 of 2019. All right, 111 of 2019. Let's run best of the biggies. Let's just run it. 111, that was the night of the DEW up call. I'm going to quick test them all, and that's going to go all the way up until now, right? Up 11%. How about from a prudent perspective? The stocks that were found in there are still up and outpacing the market over from 1 to 8 for the last 7 months. How cool is that? All right. How about it found Apple, 33%, Microsoft, 30%, Visa, Facebook, Google. That's why it's called best of the biggies. The stocks that are the nice big stocks that people know. How about it's up almost 12% where the market is up 6.86%. But wait, we got in on market timing. We've got to get out on market timing. So I'm going to click on the calendar bar. And the end date for the DEW up call was on 3/22. We're going to go to 3/22. So now my test is from the beginning of the DEW up to the end of the DEW, which would have been the DEW down. Let's run the test again. 10.15% out of the 10 stocks tested. 8 stocks made money, 2 did not. How about we're still outperforming the VectorVest composite? So I do the same thing. So this strategy made 10%. And let's go back. We go and look at the best performers greater than 1. Do the same thing, quick test. 9.92%. Biggest bargains. Let's quick test. 10.47. Now I write that down. That strategy did better than even the best of the biggies. And this is what we do to go through how you invest in the market to find a strategy based on one market timing call to see how well it worked. Now I take that strategy that did the best. Now it'll take me some work to go through. But once I find that strategy and then I do my back testing on it and I can solidify a trading plan when I know when to buy, know when to sell by the stops that I tested in the back test, and what to buy by the strategy that I'm looking at, and I'm comfortable with this strategy. And next week, I'm going to show you how to fine-tune a strategy to fit you even better. So what you're looking at here are canned searches that are in the software for you. But what if you want to look for something specific? I'm going to show you how to fine-tune a VectorVest Unisearch to fit exactly how you invest in the market. And it's going to do a couple of things. It's going to show you if you can make a strategy that's better than what we have here, or if the strategy that you're creating that you think is going to work is garbage. So, I'm going to help you by doing that, but better yet, the software is going to put into your hands the results that are going to be necessary so that you can solidify and grow your portfolio. So all of this that we're going through is the means to take advantage of the software to help hopefully grow your portfolio. But if this is not the right time to buy long based upon what you think is going on in the market, and remember, if I go back to the market timing graph, this was the reason why I asked the question. How many of you would be bullish? How many of you would be bearish? Based upon where we are right now, we are back in another channel. Do I want to set up a test and say, all right, the market's going down just to see us bounce off of this level of support and start moving up tomorrow? King Lucci, that could possibly happen tomorrow. Now, How do I know? I won't know until tomorrow. I won't know until tomorrow, but the possibility is based on this nice solid level of support, current support, it's telling me that the market is going to possibly have some more downside, but to that level of support and go back up tomorrow. All right, as a possibility. Timing has limitations. I don't disagree with that. And when the cool thing about when we say we time the market, we don't predict anything, Cub. What we're looking at is the trend of the market. Where is the trend? Right now, based on this call, the DEW call, the trend is to the downside. Based on a faster call, the primary wave, the call is still in an up call, but we're most likely going to turn to a down call today. If I don't want to be that fast, let's put on the confirmed calls. We are still in a confirmed down call. So looking at all of our market timing, it's definitely putting us on the side to be more bearish, but I know that I have a level of support here. Let's see what the market wants to do. If it breaks down, I have another level of support sitting at 44.96. If that breaks down, holy smokes, we got a lot of downside back to the low that happened in late December. All right, does everybody understand that? We're down 730, but with VectorVest guidance, I am only down 1.3% in no stop sales. Be careful with the no stops part of it. Be very careful with the no stops part of it. So, just thinking about it, in the whole idea of growing your portfolio growth made easy, we looked at our model portfolios as a way to help to know when to buy, what to buy, when to sell. Last week, we spent all of our time on market timing. This week, we spent some more time on market timing, but utilizing it to help us to find some searches to test in one market timing call that we like. Write down the searches that catch your attention, that have the biggest gains. But you got to understand the type of investor you are first to make sure you're fishing in the right pond. That's important, because I don't want you to be thinking that you're aggressive and being in the conservative portfolio, or maybe thinking that you are conservative or prudent and being in the aggressive folder. You have to lock in the type of investor you are. And once you find out and you think that you're aggressive and you find an aggressive strategy, when you start doing some of your back testing, you may find your best results probably have some of the biggest drawdowns. That's the reality of that type of search. If you can't sit through that kind of drawdown, you are not nearly as aggressive as you think you are. Understand that. And you will look at some of the conservative portfolios. They may not make a ton of money. Well, if you're looking to make more money, then you're probably a little aggressive than you think you are. So it comes down, you have to sit down and have a chat with yourself. I do that every day. Joey does too. Joey talks to himself a lot.
I have a chat with you every day.
Well, that's not talking to yourself. That's you chat with me.
Chat with you.
It's because that's the most important part of your day is to talk to me. When you talk to me. Anyway, you have to have a chat with yourself to actually hone in on the type of investor you are. Once you've done that, find the right market timing that fits the type of investor you are. Go then look at the searches to find the best searches to fit your investment type. Test those. Your next step is then to back test them. And if you go hit the exclamation point YouTube, you'll find my previous mini series called Plan Your Trade, Trade Your Plan, which walks you exactly through that. All right, so all of this is designed as tools at your fingertips to help you to grow your portfolio. That's what it's all about. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.